In a week which saw a partial reduction in lockdown measures for England, although no change for Wales or Scotland, let's have a look at what's going on with government and banking support for businesses and employees as well as part of the COVID-19 response. Well, the first thing that's important to highlight is the government's announced that the furlough measures that are in place, with the government paying up to 80% of furloughed employee salaries, will stay in place operating in some form up until October of this year. Now, they have said they're going to look at some sort of taper situation, asking businesses to wear more burden of this cost as time goes on. They're trying to create a kind of tapered way out of the furlough situation rather than a cliff edge. And the main concern really is that some businesses experiencing financial difficulty as a result of the COVID-19 situation may be in a position where they need to have quite a lot of redundancies, and the government's trying all they can to avoid that. However, looking at the view from a lot of economists at the moment, there is a lot of a view in the marketplace that there probably will be a rise in unemployment towards the end of the year. Some economists saying that it could go all the way up to about 8 or 9%. Now, that said, a lot of economists as well expect that to correct fairly quickly into 2021, and that's because of some research done in the last 2 weeks showing that the biggest drag on the economy at the moment is coronavirus and COVID-19 and the associated lockdown measures, while everyone tries to stay safe. Now, ultimately with that, a lot of people are predicting a return to growth, a return to higher employment levels in 2021. Maybe a short, sharp drop, but a recovery. And that's very much the picture that's coming through for the housing market as well. A number of people looking at the housing market think there could be a small price drop, especially over the next 2 to 3 months as we come out of lockdown, and as some people who maybe had transactions delayed, maybe had transactions aborted because people have got cold feet due to COVID-19, make some quick decisions, possibly to fire sale some properties, get some quick sales done, which may have a short-term downward effect on prices. Worth noting that a lot of the people talking about this are focused very heavily on London and the southeast rather than the rest of the country at the moment. Longer term, towards the end of the year or early 2021, most people are expecting house prices to rebound fairly quickly, and that's down to there still being a whole lot of underlying demand in the marketplace, but also a shortage of supply. We've got to remember one of the other big things that's happened as a result of the coronavirus crisis is a big slowdown in construction output as well, and that will flow through to more shortage of supply in the housing market, underpinning demand probably for the next 12 to 18 months while construction starts to ramp back up again. Interesting news coming out from some of the banks looking at what's happened over the last year or so with mortgages in arrears. Now, bear in mind, this is data that was published that runs up until March 2020, so it's probably not reflective of the immediate period with lockdown measures and payment holidays and things like that. But pleasing going into the coronavirus crisis, that mortgage arrears generally in the UK were at a much lower level than they were at this point last year, showing that we were in fairly good financial health overall. The economy was in a fairly good position, house prices in a fairly good position, demand in a good position, and personal finances also in a good condition, which all shows that we should come out of this crisis, hopefully sooner rather than later, in a strong position and able to rebound fairly quickly as well. One of the other things to look at as well, if you haven't considered it yet, if you are operating a business in the property sector or any other business for that matter, make sure you look at the business bounce back loans that are available at the moment via most major banks and backed by the government. This is very easy to qualify for funding. It's the government providing some guarantees. As a business owner, unless it's a personal name or partnership business, you don't have to provide personal guarantees. So it's very flexible funding and it's very fast as well. So as we are coming into a period of reduced lockdown measures for England, still some more strict lockdown measures for Wales and Scotland at the moment, but as we are slowly looking at the path towards normality, it's worth exploring this, whether it's a good option for your business to bring some capital in, some liquidity in your business so that you can jump out of lockdown and get back to trading and making money, which is and getting the economy ticking over again, which is what we're all aiming for at the moment.